today's advisory report. It is Friday, June 26, 2026, a down day for the S&P 500. And we are still in a neutral or uncertain gauge reading for our strategies. The intermediate trend is bullish. The short-term trend remains bearish. We are below the 20-day. We are now below the 50-day moving average also. So we are playing, I would say, not a majority of defense, but I would say a decent amount of defense in our aggressive strategies, the ultra aggressive, aggressive, moderate aggressive specifically. Let's go ahead and look at the charts really quick. And looking at that intermediate trend when price is over the 30-week moving average as it is right now, the S&P 500 is a green line and it looks constructive. It looks good. So there's nothing too dangerous right now as far as the intermediate trend. We tend to have a bullish bias as long as that trend remains above the 30-week moving average. Not to say that we won't play defense in the short term like we currently are right now. It just means that we are really looking for an opportunity for the market to turn back up during this area and to be able to take some more offense. Let's go ahead and jump down to the short-term trend. S&P 500, each one of these candlesticks is what they're called, represents 1 day of activity. So this will be roughly about a month. You can see that the market has come up, come down, come up higher, which is positive, come down lower, which is negative, come up and not quite get to the previous high, another negative, and now coming down lower below the 50-day moving average, another negative, but on the day ended up high in the range. So that's a little bit of what we are dealing with. Some levels to contend with. We have a level right here. You can see the line drawn across. We have a level right here that we broke below but then finished back above. So we'll look at this level also. And we're looking at this next level. My thoughts are if there's a little bit more weakness in the S&P 500, the expectation would be maybe to come down to about this area that we revisited a couple weeks ago and then possibly turn back up there. We'll see how it is. Of course, the market can do anything it wants on any given day. We cannot predict the future. We can only really respond based off of a plan of action. If the market goes up, if the market goes down, we're going to do this. So if the market turns back up and starts to get back over the 50-day in strength and maybe over the 20-day in strength, we'll start ratcheting down the defense and moving back to offense. Right now, it just makes sense to kind of be a little bit more neutral with our opinion of the market. Let's go ahead and jump over to Market Lens. We'll go ahead and look at some of the positions left inside of the ultra aggressive. We had to get rid of Flex today, and kind of a shame. It was a entry that we took a couple days ago and a beautiful gap up, and then kind of fell apart. Not to say that this won't turn around and come back up, but why take the risk of something that's down, 6, 7, 8, 9% on the day? We got rid of it before it hit 9%. But why hold on to something like that when the market looks so soft, right? So I'd rather have that in cash, and then if it turns back up, I'll look for another opportunity to get back in. MU down 6.7 today, but we have a small position. I think it's only about 2% of the portfolio now, but this thing has been very wild and woolly, and so we're just kind of seeing which direction it wants to make a decision on. MRVL came close to getting cut today, but kind of redeemed itself at the end, so that one's on the brink. We'll see kind of how that plays out. In fact, this could be a setup for higher, just depending on what happens on Monday's action. Lilly, a nice purchase of this yesterday, and then look at what happened with it, up 7.1% today. So that was good for the ultra aggressive account. And CrowdStrike, one of our larger individual stock positions we've been holding on to, it just looks like it wants to go. Might be just waiting for a little bit better conditions in the market. I think our ultra aggressive, looking at some preliminary stats, was actually up on the day, even though the S&P 500 was down. Everything else kind of fell in alignment or beat its benchmark. So good day today as far as that defense kind of did. The defense did a good job for the strategies today. That's what I got for you today. Take care. Have a wonderful weekend. We'll be right back at it Monday.